All right. So we go on to a summary of these are your contract law notes, okay, Unit 2 notes which we are looking at. So just to summarize, what we've looked at is, if you look at the just to wrap up the particular modules within the contract law, the larger module, what are the sub modules that we have covered? Okay, we have covered. We started with the interpretation clause. Remember, we started with the interpretation clause with section 2. Okay, so you have two ways you can do the interpretation clause. You can either follow the sequence given in the Bare Act, or you can do what I've told you to do, which is the way that you do it, like starting with what is a contract and then going on to sort of slowly disaggregating the contract. That is, a contract is an agreement enforceable by law, and then of course then you have to define what an agreement is. Okay, and then an agreement is essentially every promise and every set of promises forming the consideration for each other. Okay, so then you break down what is a promise. Promise is a proposal which is accepted. Okay, so this is your first module, which is the interpretation clause, which includes basically the essentially the disaggregation of the idea of the contract. Okay, going up backwards, also almost starting from the contract and going all the way back to the proposal. Okay, and then we had, and of course, consideration also. And so the other aspect of the first module, which is the interpretation, section 2, essentially the first sub module within contracts, is all the distinctions that we did between voidable contract, okay, void agreement, all those things. Remember, all those distinctions are actually given to you by the language of the contract of the statute itself. Okay, I have just used particular clauses from section 2. Okay, which essentially tell you all the differences. Okay, and as far as just to recap on this point, some of the expressions that I had used, like voidable agreement, where I had said that instead of using the word voidable contract, they should use the word voidable agreement. I think let's leave this aside for now. Okay, I don't want to confuse you guys at this early stage, so I put it in very small font. You can just effectively ignore it. Okay, so let's just learn. Let's not critique the act at this stage. Let's just learn it as it is normally taught. Okay, and as everybody else understands it. Okay, because these ideas have not been discussed publicly. So anyway, so these are the other distinctions that you've learned. That is all the differences between a contract, void agreement, voidable contract, and a contract which becomes void. Okay, all these distinctions that you learned. So that also forms part of your module 2, your section 2 interpretation clause, the first sub module. Okay, so as you're learning, you should also remember that you should also be preparing for your interviews mentally, in the sense that when you go to your interviews, you'll be asked two types of questions. One is the kind of question that will be just out of the blue, which you can't anticipate, so they might ask you something and you may or may not know the answer to that. And then the other type of questions which you can reasonably expect is that they, especially if you haven't been able to answer the first question, they might ask you, like, tell us what, okay, then tell me what you've learned. Okay, so in that case you should be ready with whatever your subject is, okay, whatever your subject you end up choosing. But anything that you've learned even in your first year, okay, so you can talk about lab or whatever if you want to talk about. Then you start thinking about dividing the subject up into little modules, and so you can talk about, we learned about what is a contract, how to disaggregate a contract, we saw the interpretation clause, and we saw all these differences between a contract and a void agreement and this and that. So you should start thinking about modules, so that when they ask you what have you learned, okay, you should go back with some, you should sort of reply to that with a very specific set of answers, which is a very tightly defined topic. Don't give them like wide topics, like some of your seniors and super seniors sometimes have said, we learned about stock markets. Now stock markets is a very wide, it's like a wide goalpost. Then they might just shoot some question through that goalpost, which is some topic in stock markets which has not been covered. It's quite possible because it's a very broad topic. So you should look to always give them very tightly defined topics which you have covered and mastered quite well. Okay, so if you talk about these kinds of distinctions, so if you talk about all these distinctions, all the distinctions between the 4 types of concepts we discussed, so that's a very tightly defined topic, and there you can answer it with confidence, and they can't ask you kind of broad questions. So that should be your task. So as you are studying, you should also understand these kind of sub-modules within the larger modules, and all the concepts that you're learning, and how these can form the material for what you do in your, how you answer in your interviews. Are you able to follow what we're saying? Yes. Okay, so you master, as you study, you master these concepts. Okay, say you can say that, okay, I'm going to master this all these distinctions, okay? And maybe you can also talk to them about how you learned about the second part which we are coming to, which is when we go to another thing you can also talk about is if you talk about the chapter 2 of the Contract Act, okay, where you have all these sections from all the way from 10 to 30, okay. So in chapter 2, what did we do? We just started with section 10, and we saw that in section 10 there are like 5. So section 10 is a very important section because what does it do? What is the title of section 10? What agreements are contracts? Okay, so it answers this very important question of, okay, so you've told us that a contract is an agreement enforceable by law, okay, but then how do I know when I'm looking at an agreement? Okay, so this is another module, another sub-module that you can prepare for and answer in your interview, okay, and discuss in your interview, is that this whole business of agreement and contract. When I'm looking at an agreement, how would I know whether this agreement is actually a void agreement or is it a contract? Okay, so how do I come to this conclusion? Well, the answer lies in section 10. And section 10 gives us these 5 filters, okay, and as we go through these, and all these 5 filters have to be clear, okay. So, and as we go through the 5 filters, we can see that actually section 10 eventually leads us to all the other sections of chapter 2, okay. All the sections from 11 to 20, okay, 11 to 30 are all covered essentially from starting from section 10 itself. It will eventually lead you stepwise to all those sections. Are you following what we discussed? Remember? So that if you start with the 5th one, which is not expressly hereby declared to be void, that will take you to sections 25 to 30. Okay, so I've eliminated section 20 from that list. And then lawful consideration and lawful object will lead you to, I think, 23 and 24. Okay, then competency to contract, okay, who is competent to contract will lead you to section 11 and 12. Okay, and then once you go into the first one, which is free consent will lead you all the way from 13. Okay, so 13 will lead you, then you will have consent is defined in 13, then you have free consent, okay, and then free consent in turn section 14 will lead you to all the other sections, 15, 16, 17, 18, 19, 21, 22. So in this way you can see the structure starting from section 10 in the middle, which leads you to all of chapter 2, okay, of the Contract Act. So this can also be a topic for discussion, that how essentially and because this is a very important question, whenever you're looking at an agreement, okay, you have to decide whether the first decision is whether this is a void agreement or is it actually enforceable and is it a contract therefore. Okay, so this can be answered by looking at the guidance given by section 10, and this covers the whole of chapter 2. So this is another aspect we have covered under contract law, okay. And then we have covered some stray ideas which are important also, which are like that acceptance has to be absolute, that counter offer is not acceptance, okay. Then we have covered things like promises, very important in section 9, okay, that promises can be express and implied, okay. Actually there should be promises, they've discussed promises express and implied. So essentially when we say promises can be, we should say promises can be expressed or implied, okay. So express promise is what is an express promise? One which is made in words, okay. So words means could be written or oral, okay. And then of course if it is what is an implied promise?
Through actions.
Through actions, but what the statute says? Yeah, conduct of parties, yes, that is how you interpret it, but what does the statute say? Otherwise than in words. Otherwise than in words, okay. So words and otherwise than in words, that's mentioned in section 9. That's important because many students have a misconception that a contract has to be written and registered and all that, okay. It doesn't even have to be oral, okay. There need not even have been any discussion. It can be just inferred from the conduct of parties, okay.
And so still they require a person who can be a proof or the eyewitness. Like if I'm promising someone and the other day I just walk back from my word, but there should be a third person who can say, yes, you said this, whatever you promise someone. Like,
yeah, see here you're raising a point, I understand what you're raising, that you're thinking about how do you prove it, okay. So that should be treated as a separate issue, okay. So when you're thinking about what the law requires in terms of the attributes, okay, the law does not require a contract even to be written, okay, or it doesn't even require it to be oral, okay. The law is ready to even infer the existence of a contract from the conduct of parties. The question that you're raising is a different question, which is a question of how are you going to prove it in court, Okay, so when you're thinking about the first question, which is what does the law actually require, then you can assume that that second question has been satisfactorily answered. So you assume that you can prove it in court. Okay, so in fact what might happen, of course, is that in a real life situation, you may actually have a contract, but you may not be able to establish the existence of the contract in court, because there you have to adduce evidence, and the evidence has to be believable by the court. So the court has to consider it credible. Okay, so that is a separate problem. Okay, so that should not affect your understanding of what the law requires in terms of the existence of a contract. This is clear. Okay, that is to be treated as separate, because many times it happens even in the criminal law, for instance, where you know that somebody has committed, like if you are a public prosecutor, you are prosecuting someone. Okay, you don't bring just every charge that you think that the accused is guilty of. You only bring those charges which you can prove, which is there in your notes, but we didn't cover it, it's not in your syllabus, that in a criminal case you have to prove every charge beyond a reasonable doubt, because the standard of proof is the highest in a criminal trial. Okay, so a prosecutor will only bring those charges which he is fairly confident that he can prove beyond a reasonable doubt. Now he may believe that the criminal has actually committed a lot of other crimes, but he may feel that we don't have the evidence to convict him. Okay, with beyond, by presenting evidence beyond a reasonable proof and establish the fact that he has committed those crimes. So they let those go. They only charge him with those crimes that they are confident that they can prove. Okay, so that's a separate question. Okay. All right. Okay. So we covered these other stray ideas as well, and then we also looked at. So these are the three two sub-modules so far. Okay, and if you take the points we covered as stray ideas, that is section 7 and section 9, okay, you can look at them as the third module, and that actually leads us, as part of the third module, you can look at this chapter 1, okay, which is dealing with the communication, acceptance and revocation of proposals. Okay, so do you guys understand what revocation is? Taking
back what?
Correct. Taking back. So revocation has the sense of taking back. Okay, so I revoke the offer. Okay, so somebody might, so when you are going for placement, a company might make you an offer during placement, and then the company might actually give you maybe 10 days. Okay, and after 10 days, if you have not accepted the offer, they might revoke the offer, or even within 10 days they can actually technically revoke the offer. Okay, so the revocation has the sense of taking back something which was given earlier. Okay, so especially it's used in the context of offers and things like that. So therefore, because what is happening, why is chapter 1 dealing with the communication, acceptance and revocation of proposals? Why is that important? Because remember that what is an agreement? Set of promises, okay, or you can say reciprocal promises which form the consideration for each other. That's an agreement. Okay, and what is a promise?
The acceptance of the proposal.
Yeah, not the acceptance of a proposal, a proposal which has been accepted. Okay, a promise is a proposal which has been accepted. Okay, so that's why chapter 1 is titled Communication, Acceptance and Revocation of Proposals, because the moment a proposal is accepted, it becomes a promise. Okay, and if there's a reciprocal promise, it will be an agreement, and then it only remains to pass through the filters of section 10. Okay, so that's why it's very important to be clear as to when exactly, what are the standards for acceptance, what are the standards for communication. Okay, so if I'm making an offer to somebody, okay, I can just, maybe that person is like in a different city, and I just sit in my room and say, okay, I'm making an offer to Ajay of this. That's not sufficient, because he has to hear the offer. Okay, the offer has to come to his knowledge. Okay, so these are the kinds of things that are, so we are setting certain standards for the communication of proposals, okay, and acceptance of proposals. Also, there are certain standards. So in chapter 1, we will look at, we're not covering chapter 1 section by section, okay, but we will have some reference to chapter 1. We've already covered some parts, like that is section 7, which is acceptance must be absolute, and section 9, which is that promises can be expressed or implied. Okay, so these two important sections we have covered, and we'll make some reference to, you guys should also read for some of your cases. If you feel that some of these sections are relevant, you can go and refer to them. Like some of you did that kind of homework for this case. You tried to refer to some of the sections. Okay, so this is basically like the set of sub-modules within contract law that we have covered. So your interpretation clause, then chapter 2, which is starting from section 10 and covering all the sections from 11 to 30, and then you can say your third sub-module is chapter 1, essentially, parts of chapter 1, and looking at particular ideas within chapter 1. Okay, so these are your, this is your wrap up on contract law, but briefly let me just come through to this. Okay, here's where you have a little bit of a problem, okay, because I'm looking at this thing, but you can see it later on your own, okay, in the, maybe I can actually draw it on the board also here. So you have contracts which are, what is happening? How do you open this? I've never, okay, just pull it out. Okay, so here we have agreements which are split into contracts and void agreements, okay, VA here. Okay, so under contracts we will have two types of contracts, okay, which is voidable contracts and here this non-voidable, you have to be careful that this is not a term that exists in the statute, and people don't normally use this term. The only reason I've used the term is because I wanted to make a distinction between this, and here you can go back to your first principle of taxonomy, that whenever you're doing any kind of taxonomy, you should have the categories, these taxa, these are taxa. Each of these, this is a taxon, that is T-A-X-O-N. Okay, this category is a taxon, and these plural is taxa. So the taxa have to be mutually exclusive at any level when you're doing a taxonomy. Okay, the reason the taxonomy is very important is when you are, one of the things that people expect, one of the things that you will face in the world of business is you will face very unstructured situations. Okay, in the world of business, problems will not come to you purely in a silo kind of structure where, okay, this is only a marketing problem. Okay, every problem has, you know, aspects of all different disciplines, like different domains, like finance, marketing, operations, legal. Everything will be mixed up in a particular problem you face in the real world. Okay, so there's a very unstructured kind of situation. So if you have a knack for taxonomy, it will help you to bring order to the situation. Okay, that is why taxonomy is important, to have some idea about how to do good taxonomy. Okay, so you have this classification, and then under voidable, of course, you have either if it's voidable, then it is, so it is rendered void. Okay, what is meant by rendered void? Rendered void means that let's go back to the example of that girl who was married off to the old man, okay, through deception. So she may actually then exercise her right to, you know, not perform that contract, and then she may go to the court and tell the court, and if she can establish before the court that this there was deception, okay, practiced on her, and that's how she was induced to marry this man, so the court will annul the marriage. So one of the things that can happen in a voidable contract is that it can actually be rendered void. Okay, so the other thing that can happen is that it can be performed. Okay, so the other option that she has is she can perform the contract. That, as we said, voidable contract does not mean that she has to necessarily have the contract rendered void. She can also decide to perform the contract and remain married. Okay, so perform the contractual obligations of the marriage. So once the contract is performed, we say that the contract is discharged. D is for discharge. You can see this later on your framework. Okay, so this is one kind of set of outcomes that can transpire. Okay, let's look at the other one here. Okay, which is then if you have a non-voidable contract, then the question that will contract which becomes void. Okay, does contract become void? Is it again that machine making a noise? Okay, I don't know why it keeps acting up on its own. It's like, okay, so yeah, okay, so this can either be yes or it can be no. Okay, so remember, in a non-voidable contract, one of the things that can happen is, now this contract is perfectly fine at the beginning, it is enforceable against both parties. Okay, but then some event can transpire in which basically the contract becomes void. Okay, so you have a situation where a contract which becomes void. So the question we're asking is, does it become void in that way? If it's yes, then it will go back into the category of a void agreement. Okay, or if the answer can be no, which means it remains as a normal contract. Okay, it does not become void. In this case, it's no. In this case, again, your subdivision is that it is either performed, okay, or it is breached. So we'll do some cases on breach of contract. Okay, So either, so if it remains a normal contract, so either you perform the contract, perform means both parties will discharge their obligations under the contract, okay? So once it is performed, we say that the contract has been discharged, okay? And here if there is a breach of contract, okay? Here there is a breach of contract, okay? If you have a breach of contract, you can actually sue for, as you can see again, you can sue for what is called specific performance, and then you can sue for damages, okay? Alright, so let me just briefly explain. Are you following so far? Is everyone following so far? Okay. Okay, so so contract did not become void, it remained here, so you have two things can happen. Parties can perform the contract smoothly, and then we say the contract is discharged, okay? So, and then one party can breach the contract, okay? So that is one party refuses to perform its obligations under the contract. In that case, the other party can do two things. It can either sue for damages for breach of contract, okay, whatever loss or injury you suffered, to reclaim that. And the other option is that it can sue for what is called specific performance. In this case, what we are saying is we are not interested in any damages, but we want the other party to force the other party to perform the contract, okay? So one example of this is that under the Hindu Marriage Act, we have something called, I think it's section 11, which is there's something called restitution of conjugal rights, under which, say for instance, if a wife, let's say, has gone back to her, parents' house, okay, and then the husband can actually sue the wife, okay, and ask the court to order the wife to come back and live with him, okay, because they still remain husband and wife. So here what he's going to argue essentially is that the contract of marriage, okay, she's still bound by the contract of marriage, and that requires her to live with me, okay, and so the court should order her to come back and live with me, and this is basically this section is titled the restitution of conjugal rights, okay? Are you following? So here the wife will be forced to come back and live with the husband and perform her marital obligations, okay? So this is a little bit of controversy around this section. There was one ruling in which a judge had actually, one of the High Court judges, I think in the Madras High Court, had actually said that this kind of thing is barbaric. You can't have this kind of a woman being forced, okay, to come back. But essentially, it was upheld by the Supreme Court, okay, that because the court wants to honor it wants to respect the marital bond, okay. So there's some controversy about this. So anyway, so this is the breakup. So this is a kind of a taxonomy of agreements, okay. So this covers your contract law or contract law theoretical parts, and then we go into the discussion of cases, okay. So all right, any questions guys at this stage on contracts? Yeah.
So in breach of contract, it will be either suing for
Why don't we use the mic? Let's have the mic. Does she have the mic?
Sir, in the breach of contract, either the aggrieved party would sue for the specific performance or the damages.
Yeah.
Both it cannot sue for both the things.
You can't sue for both, because if you're getting specific performance, then you're not entitled to damages anymore, right? Okay. All right. Okay. So no questions, no further questions. So we still have about half an hour, which is what we had in the other class. Yes. You have a question?
Yes.
Yeah. Yeah.
So in case of a breach, is it necessary to be on specific performance or damages? There might be a reason that the non-voidable contract, which in one party has agreed to be considered it to be a void contract, and the other is still considering it to be
You just use the word void contract. No, never use the word void contract. So come again. I'm not able to follow what you're suggesting.
Sir,
It's a non-voidable contract to begin with, okay?
But
And
it has some clause from where we can say a contract is void.
again, you're saying contract is void. What are you trying to get at? You're saying there's an exit clause.
Yeah.
Are you saying there's an exit clause?
For example, if an insurance company, I have insured my shop, and due to some natural calamity, my shop collapsed. If I go for a claim, they say, okay, it's because of a natural calamity, so we are not going to pay for the
Okay.
So in this case, I can't do anything. I'm unable to do anything as it's written there. Okay.
Natural calamities are not covered.
Yeah, natural calamities are not covered.
Okay.
But there might be some situations where one person.
You're also not using the mic properly.
One party out of the two is saying no, it's a non-voidable contract, and the other is saying no, it has transferred. It has become a voidable agreement. So
No. Actually, you see, first of all, one thing you have to be clear about. If the contract explicitly says that natural calamities, damage due to natural calamities is not covered, then it is not even a question of breach. Breach is only, the word breach is only going to be used when then explicit obligation need not be written, okay? When a clearly, when there is a determination that this obligation exists and the party has failed to perform that obligation, only then can you say there is a breach. If it is clearly stated in the insurance contract that natural calamities are not covered, and then the insurance company is not paying for damages for natural calamity, then where is the question of breach? There is no breach.
Sir, there is no question.
They never promised to cover that anyway.
There is no question of breach, but in some other situation, like two people come into a partnership, and due to some reason, one partner says, okay, because of this reason, it has gone into a voidable agreement. But the other states that this is not the right reason to convert it into.
No, in that case, that will have to go to court. That dispute will have to go to court, and the court will have to assess whether which party is correct, whether there is an obligation to perform the contract or whether there is an actual opportunity to exit. Okay, that will have to be decided by the court. Okay, so it's clear. Okay, anybody else? Okay, all right. So then let's see. Again, we keep on losing the connection. I don't know why this is happening. Okay, luckily we have, I think, almost everything opened. I'm actually afraid to change this chart because okay, so now what we are going to discuss, guys, is okay, I'm going to have a problem because if the link is not, if the internet is not working, I need to open. Okay, there was a news item. Now what we are going to do now is we have about 25 minutes. In the other class we had 35 minutes. So okay, so we're going to discuss business and finance in general. Okay, we're not going to waste this time. So what we are going to do is, I've lost the connection. There is a very big problem with the internet connection now, and I don't even have this. Okay, so although it shows on paper that we have the okay, it's not going to work, so I'm going to just have to talk about it. Okay, so the first thing I'm going to cover now is in the second question that I've given you, the second question is on the Pharmaceutical Society of Great Britain, right?
Yes, sir.
Okay, so versus Boots Cash Chemists Southern Limited. Okay, so that's a pretty well-known case. I think we've got this back. Let me open this right now, and let me also change the chart. I'm going to just briefly cover the
Sir,
yes. Yeah. So again, Vaishali will keep track, doorkeeper. Only one person has to go out at a time. Okay. All right. Let's just look at the daily chart and in dollar yen. Okay. In Singh versus Rupee. Okay. Like now, in the other class, Kanoria asked a question about. She asked us to explain. She asked me to explain the questions in the Pharmaceutical Society case, because I've asked about two questions. What is the issue prima facie, and what is the underlying issue, okay, or the issue as a general principle. So let me explain. That's a good question actually. So let me explain once again what that means with respect to a particular example. Okay. So the first point is what is the issue prima facie is very simple. Let's take an example. Okay. We take an example where we take an income tax case. Okay, where the assessee has declared his income as 50 lakhs. Okay, and let's say that the assessing officer is saying no, your income is not 50 lakhs. Your income is So your income is 65 lakhs. Okay, so there is a difference of 15 lakhs, and the assessing officer is saying that this 15 lakhs additional amount also should be included in your income. Okay, so the issue prima facie. Now, when this case goes to, income tax cases in India go through several levels. Okay, you start with the assessing officer, then it goes to the Commissioner of Income Tax Appeals, or CIT Appeals, then it goes to the Income Tax Appellate Tribunal, then it goes to the High Court, and then it goes to the Supreme Court. Okay, so it's a long route. And so what happens is, when it goes on first appeal, so the way that the authority will frame the issue prima facie in the case, you'll see this when you read the judgments. The issue prima facie will be quite apparent because most of the time the judge himself will write it out. Okay, the issue in this case is whether this, that. So in this particular case, what will happen is the issue prima facie will be written as whether the assessee's income for assessment year so and so, okay, is 50 lakhs or 65 lakhs. Okay, this is going to be the issue prima facie because the issue is actually nothing but what is the point that these guys are fighting over. Okay, so this is what they are fighting over because the assessing officer is saying no, your income should be 65 lakhs, and this guy is saying, the assessee is saying no, my income should be 50 lakhs. Okay, so the court will just write out the issue prima facie in this manner, saying whether the assessee's income, so issue is always written like this, whether this is true or whether this is true, whether this person has committed the offense of theft. Okay, so whether the assessee's income should be 50 lakhs or 65 lakhs. Okay, now if you delve deeper into the facts of this case, let's assume the facts of this case are such that, so this particular 15 lakhs discrepancy is coming from, obviously the assessing officer also has some logic. Okay, he's looking at some transaction. So let's say this particular assessee has actually invested, let's say 3 crores of rupees he has invested in. You can't actually, under the current law, you can't invest that much money abroad in 1 year. But let's say that he is, for the sake of argument, he has invested 3 crore rupees outside in Singapore. In Singapore, he's put it on a Singapore dollar deposit. Okay, so he transferred out rupees and he, has put it on a deposit in the Singapore bank in Singapore dollars. Okay, you understand this concept that every currency is a different account, unitive account. Okay, so you can't like add amounts in Singapore dollars and amounts in rupees. You can't just add them together. It's like adding inches and feet. Okay, you have to convert it to the same unit. Okay, so every currency, if you want to add currency amount, you have to convert it to the same currency. You can standardize it. Okay, so he has transferred this, and let's say that the Singapore dollar has appreciated against the rupee. Like right now, the level is around 51.7. Okay, so let's say this has appreciated, and he started when it was like 41. Okay, so when he invested the money, when he converted his Indian rupees into Singapore, so the way the transaction works is, you learn a little bit about financial market transactions as well, that every transaction in a financial market should be seen as an exchange of assets. Okay, pretty much every transaction, even in a physical goods sale, you can think of every transaction as an exchange of assets. Okay, barring transactions in services, okay, where you are exchanging services, but any transaction in financial assets or goods, it's useful to think of this framework that every transaction is an exchange of assets. Okay, so when you go to the market and buy sugar, you're exchanging assets in the sense that sugar is coming to you. So we treat sugar as an asset. Everything is treated as an asset. So goods are also a type of asset, and currencies are also a type of asset. Okay, everything is a type of, the stock is an asset, a bond is an asset, everything is an asset. Okay, so every transaction is an exchange of assets. So when you buy sugar, the exchange that is happening is 2 assets are being exchanged. Sugar is being given to you, and you are parting with what asset? Cash. So in this particular case, we would say, we would be specific and say, if the transaction is happening in Delhi, we say you are parting with Indian rupees. Okay, so if you are buying in Tokyo, if you're buying sugar in Tokyo, most likely what is happening is you are getting sugar and you're parting with Japanese yen. Okay, so this is how we would describe it. So Japanese yen would be treated as a different asset, as you know, when compared to the rupee. Okay, each currency is a different asset. So in this case, what happens is they do a first exchange of assets where they convert the Indian rupees and buy Singapore dollars and put it on deposit in the Singapore account. Okay, now that happens when the exchange rate is 41, which means what? 1 Indian rupees equal to 41 Singapore dollars. Yeah, so 1 Singapore dollar is equal to 41 rupees. Okay, that is how it is quoted, and so you have to be clear about that also. When the exchange rate, what does it actually mean? Okay, so like I was just showing you dollar yen earlier. Dollar yen, we would have seen the rate is around somewhere around 112 or something like that. So that again means 112 yen for 1 US dollar. Okay, you have to be clear about that as well. Okay, so now this guy has seen this appreciation in the Singapore dollar. After he converted and put it on deposit in the Singapore dollar, let's say in the space of 1 year itself, it went from 41 to 51. Okay, and this actually has led to a, if you calculate the rupee amount of the profit, okay, the profit that he has received on, it's an unrealized profit. Okay, the mic has gone off. I know, but maybe the battery has run out. We have this problem from time to time. Yeah, the battery is gone. I don't know why the battery keeps dying out so quickly. Okay, never mind. I can use this mic, yeah. Okay. Okay, so, all right. Even this is not seen. Okay. So, this is appreciated from 41 to 51. Okay, so here what we say is that, but he has not closed his deposit. He's not liquidated his deposit in Singapore. Okay, it remains on deposit in Singapore. So he's still holding it abroad as as an asset overseas. And what he's saying is, so, and let's say that on that, the amount of appreciation that you have seen on this is basically amounting to 15 lakhs, okay? And this is where the controversy arises, because the assessing officer is saying, okay, this is one more point to understand, that when you are trading in, if say Singapore dollar exchange rate, Singapore dollar rupee exchange rate is written as, say 41, means that one Singapore dollar equals 41 rupees. If this is how it's written, okay, then whenever you're making any profit or loss in this particular market, okay, and every exchange of assets, when it's happening, when there are two unique assets, we treat that as a market, okay. So we treat the Singapore dollar rupee as a market, okay. So in the Singapore dollar rupee market, every time, because the way the exchange rate is quoted is that one Singapore dollar is equals so many rupees, and the amount of rupees that is equal to one Singapore dollar, that keeps fluctuating. That's where the rate keeps fluctuating. So in this kind of a market, when you make any profits or losses, those profits or losses are going to be in what? Singapore dollars or rupees? Is my question clear?
Yes.
Question is not clear. Singapore dollar rupee is treated as a market. Any kind of pair of assets will create a different market. Okay, yen against US dollars is one market. Sterling against US dollars is a different market, because any of the assets changes, then the market changes. Okay, so now what we are saying is, you have to be clear as to which, in every market, what is the quoting convention. So in the dollar yen market, you know, the quoting convention is that so many yen per dollar. That keeps fluctuating. Sometimes it is 95, sometimes it is 105. So what is fluctuating is the number of yen per dollar. That $1 is not changing. Okay, so here also in the Singapore dollar, in the Singapore dollar rupee market, the one Singapore dollar business is not changing. What is fluctuating when it goes from 41 to 51 is how many rupees are required to buy one Singapore dollar. Okay, this is clear. This is the scheme. Now in this kind of situation, so in the Singapore dollar rupee market, if you make a profit or a loss, is that profit or loss to be counted in rupees or Singapore dollars? Okay, so we have a difference of opinion here. Some are saying Singapore dollars and some are saying rupees. Okay, let's come up with a simple rule which you should never forget, where you can always solve this problem. Okay, now when you go, let's say you're a sugar trader in India. Okay, so you first buy 10 quintals of sugar at say 50 rupees per quintal. Okay, and then you sell those 10 quintals at 75 rupees per quintal. Okay, so you have made 25 rupees per quintal profit. Okay, now this profit is in sugar or in rupees? Profit is in rupees. Okay, now if you look at the sugar market in Indian rupees, how is it quoted? Is it number of rupees per quintal of sugar, or is the number of quintals of sugar per Indian rupee? Number of rupees per quintal of sugar. Okay, so if number of rupees per quintal of sugar in this kind of a market, when the market is quoting like this, okay, then you say that the profit and loss is made in Indian rupees. Okay, so the same logic should apply here also. If the Singapore dollar rupee market is quoted in this way, that it means, I mean, the quote means that 1 rupee, variable rupees it takes to buy 1 Singapore dollar. That keeps fluctuating. Are you following?
Yes.
Some people have totally dozed off. Okay, so are you following? What happened? What is the problem? Okay. All right. So come back to that example. So in the sugar market, if the sugar market is quoting as number of rupees per unit of sugar, quintal is 1 unit. You can also quote it in kilos or whatever. So if the sugar market is quoting as Indian rupees per unit of sugar, okay, and then you say that in the sugar market, when any profit or loss is made in the Indian sugar market, it is made in rupees. Okay. Now come back to the parallel example of the Singapore dollar rupee market. In the Singapore dollar rupee market, we are saying it is quoted as number of rupees per unit of Sing dollars. Okay, here the unit is 1. Okay, it could have been 100 also if you wanted to, but the convention is that it is 1. Are you following my logic?
Yes, sir.
Okay, so if you use the parallel logic, then in the Singapore dollar rupee market, any profits and losses you make are going to be in what? Rupees. So now the Singapore dollar camp has changed their view. Okay, so now you understand. So if you ever forget you can work it backwards like this, that when you're buying and selling sugar in India, you make any profits, that's always going to be in rupees. Okay, so you work it backwards from there if you get confused in any other market. Okay, so now what we are saying is this 3 crore rupees that you converted into Singapore dollars and put on deposit in the in a Singapore bank is now showing an unrealized profit of 15 lakhs. Okay, we are calling it an unrealized profit because he has not reconverted that Singapore dollar, he has not liquidated the Singapore dollar deposit, not sold the Singapore dollars and bought it back and bought back Indian rupees. Once he does that, we will call it a realized profit. As of now, it remains an unrealized profit. Is everyone clear about this? What is an unrealized profit? Okay, and what is a realized profit? So an unrealized profit is also referred to as a mark-to-market profit. Mark-to-market, mark as in, marks, you get marks for your exams. Mark to market. Okay, mark to market only means that you just, whatever assets or liabilities you have, you revalue them. Okay, you're familiar with the balance sheet. Okay, you revalue them using the current market rates. Okay, so if you have some inventory, you've done accounting, you've done inventory revaluation. Okay, you can have impairment charges and all those kinds of things. So mark to market only means that you are marking everything, you are just revaluing all your assets and liabilities by using current market rates, not historical rates. Okay, so is this clear? Are you guys following so far? Okay, Amit, look like you're not falling asleep. Okay, all right. Okay, so so is this clear now? So that why is the dispute arising? The AO is not a madman. Okay, there is some logic in what he's saying. His view is that even if you have an unrealized profit on investments in foreign countries, okay, so this is an investment in a foreign country. If you have an unrealized profit on an investment in a foreign country, that unrealized profit should be treated as part of your income for that financial year. Whatever amount of profit you made in this year. Okay, so they'll take the rate at the beginning of the year and the rate at the end of the year, the foreign exchange rate. Okay, and they will see how much, they'll see that, okay, at the begining of the year, the Singapore dollars were worth 41 rupees per dollar, and at the end of the year they are worth now 51 rupees per dollar. Okay, and let's say this amount amounts to a gain of 15 lakhs. Okay, so this is where the AO's difference of 15 lakhs is coming from. Are you following now?
Yes.
This example that we have discussed? Okay, so now what will happen is, so that's why if we go back to the case, now the statement of the issue in the case, right? So we stated it as the issue prima facie, okay, which is basically going to be always going to be tied up with the particular facts of that case. Okay, so here, as we said, we've already discussed that the issue prima facie in this case is going to be stated as whether the assessee's income for assessment year so and so is 50 lakhs or is it 65 lakhs. Is this clear? So now you can see that obviously you can't take this statement of the issue to some other case, because there the numbers are not going to be 50 lakhs and 65 lakhs. There'll be some different set of numbers. Okay, some other assessee, some other case will be different. So the statement of the issue prima facie is always tied up intimately with the facts of that particular case. Okay, it will be stated in this manner. Is this clear? Now, what is now that you understand where the dispute is arising from? Okay, because the assessee is saying that no, unrealized profits should not be treated as part of my income because I have not yet realized this profit. I have not liquidated that Singapore dollar deposit. I have not converted the Singapore dollars back into Indian rupees. If I did that, then it would be a realized profit, then I would treat it as part of my income. Okay, so the assessee is saying unrealized profit should not be treated as part of my income, but the assessing officer is saying no, even if it's unrealized, okay, it should be treated as part of your income. Okay, so now we can state the issue more generally. Okay, we can state it in because when we are stating the issue in a very general way, the objective is to basically now start looking at what the ratio is, how the ratio is going to come out. This is going to be intimately connected to the ratio decidendi of the case. So we want to state it in as general a way as possible. So here we will say, so whether investment, so the issue at a general level, okay, so the underlying issue will be, sorry, that whether investments in foreign countries, you can actually make it even more general and say including even domestic situations, okay, if you want to make it really general, and in this case let's just talk about the foreign countries, whether investments in assets in foreign countries, okay, and when I say assets means it, in this case it happens to be a bank deposit. It could have been a house you bought in Australia. When you bought the house it was worth maybe 3 crores. Now at the end of the financial year, because of house price appreciation in Australia, this house is now worth 4 crore rupees. Okay, if you converted it at using market rates, if you notionally convert it, it's now worth 4 crores. So the guy will say you made 1 crore of extra income this year. Okay, so we can generalize it. It's not just for bank deposits, whether investments in assets in foreign countries, whether unrealized gains on investments in assets in foreign countries are to be treated as the assessee's income for that financial year or not. Are you following? Okay, now can you see that the statement is not tied to the facts of this case only? If I have another case tomorrow where there is a similar situation, some guy has bought a house in Portugal or something, okay, and that house has appreciated in value, okay, or it could have even depreciated in value, then the question would arise whether he's allowed to take that as a loss. Are you following? Some guy could have bought a house in Portugal, okay, and that house might have either appreciated or depreciated in value. Then the dispute can arise as to whether, because the assessee will always want to take it as a loss if there is a depreciation, and then the assessing officer will not want to allow it as a loss. Okay, so the same question. So whether profits and losses, okay, on investments in assets in foreign countries, okay, are to be included in the assessee's income for the financial year or not. Is this clear?
Yes.
Are you following now? This is a very general statement of the issue because this can now be applied to multiple cases which can have similar facts. Okay, Khushbu is not convinced. Okay, what is the problem that you have? Where do you have the problem? You're not in agreement with the way that I have stated the underlying issue. So how should it be stated according to you?
I'm not actually, to be very honest, I'm not getting what you're saying.
No, but did you understand the basic controversy? You understood the basic controversy. So this guy's put some money on deposit in Singapore.
Yeah.
It is still lying in Singapore dollars.
Yeah.
But since you can observe the market rate for Singapore dollars to Indian rupee,
Yeah.
you can convert, let's say that amount was, say, let's say 5 million Singapore dollars, just for the sake of argument. Okay, so when you converted that 5 million Singapore dollars at the rate when he actually took the money out, okay, that was worth only 3 crores. Okay, now if you convert with the current market rate, if you notionally convert that Singapore dollar amount, okay, that is amounting to 3 crores and 15 lakhs. Okay, and the assessing officer is saying that extra 15 lakhs, that is your, even though it's your unrealized profit, it should be treated as your income for this financial year. Is this clear? Okay, unrealized profit. So the controversy is about unrealized profit or unrealized loss also. You can generalize it because once the court rules that unrealized profits are to be counted, then unrealized losses will also have to be counted. Okay, and the assessee should be allowed a deduction because you can't have it both ways. Okay, so the revenue can't have it both ways. So is this clear now? So this is what is meant by stating the issue at a general level. So you try to understand, you look at the particular facts of the case, and from there you try to apply a process of abstraction and try to state the issue at a very, very general level, at which level it can be applied to multiple similar cases. Is this clear? You understood? Okay. So this is one point we had to discuss. And so now, how does this lead very easily to the ratio decidendi? Okay. Now this will also help you to understand what is the ratio decidendi. Now think about the ratio in this particular, what will happen? Let's assume that in this particular case, the judge rules in favor of at the ITAT level, the judge rules in favor of the assessee. Okay. So if the once you know that once you stated the issue in this general form, okay, and then you know the decision given by the judge, you know that the judge has ruled in favor of the assessee. Okay. So obviously the judge always rules based on a reason. It's not like the assessee is ruling, right? So the moment you know that the judge has ruled in favor of the assessee, immediately you know that what would have been the judge's reasoning for ruling in favor of the assessee. That means the judge has established a principle. Remember, ratio decidendi is reason for deciding. Okay. So the judge must have believed that unrealized profits and losses should not be included in the assessee's profit and loss statement for the year. Okay. And that's why he did not include the 15 lakhs in his profit, in his income for the year. Is this clear? And that is the only way. So effectively, by ruling in favor of the assessee, the judge is laying down a principle that unrealized profits and losses are not to be included in the assessee's income on investments in assets in foreign countries. Is this clear? Okay. So from the decision itself, you can clearly see the ratio decidendi of the case, and you can see how a general statement of the issue will directly lead you, along with the decision in the case, it will directly lead you to the ratio decidendi of the case. Is this clear? Okay, now very quickly, we don't have, I might have to just overshoot your time a little bit. I want to quickly cover a topic which I covered in the other class. You want to take a break and come back? Okay, now briefly, okay guys, one sec. I will just include this in your discussion, okay? And you can just think about it. There is a discussion today, because we haven't reached time yet. 1 minute, guys. We haven't reached the end of the class yet. One sec. So there is a news item today on HCL. Have you followed that? HCL and IBM? You guys are supposed to be reading all the stuff. This is there on Bloomberg Quint. Okay. So there is a discussion. HCL has bought for $1.8 billion. HCL has bought a bunch of software assets from IBM. Okay, so just think of somebody buying Word, PowerPoint, and Excel from Microsoft. Okay, when you buy software assets, okay, it's like any other assets. They are going to generate a bunch of revenues, because when you have these pieces of software, you are going to license them out, and you will get the licensing revenue. Okay, so every year you will get licensing revenue for these products. Okay. So now what has happened is that the news item is that the stock of HCL has tumbled on the stock markets today on the back of this news. Okay, that they have spent $1.8 billion to buy these assets from IBM. Okay, so now the question is basically going back to just this discussion I had in the other class, is that you guys have done this NPV calculation for projects. Okay, you've done an NPV calculation for projects. Okay. So if you take let's say just a simple, so the point is that you have, and later on you're going to do bond valuation and stock valuation. Okay, so the point is that all these asset valuations actually are essentially the same thing. Okay, essentially, let me just see if we don't have this here. We don't really have this here, but I'll just try to. So the point is essentially that the framework that you use for NPV. What is the framework that you use for your NPV? You project the cash flows. Okay, and then you discount them. Okay, you discount them, and then you deduct the cost of it to get your NPV of the project. Okay, so the point is, if you forget about the cost part first, the cost part is how much it costs you to get the project, and the cost should be more than the value of the cash flows. Cost should be less. Okay, should be less than the value of the cash flows. Okay, so it's essentially the value of the project can be seen as everything except the cost part. Okay, so you compare the value of the project to the cost of the project, and then if it's positive NPV, you take the project. Okay, so now the point I'm trying to emphasize is that framework that you've used for the value part of the project, leaving aside the cost term. Okay, that is the same framework you use to value every asset. Okay, so the point of today's news item is you should be able to use your finance theory knowledge to understand business news stories. Okay, so today the stock market is selling off, it is dumping the shares of HCL because they've paid $1.8 billion. Okay, so the question I asked the other guys was that what do you think the market believes as far as the value of those assets they've bought? They bought those software assets. Valuation of software asset is no different from a project valuation. You will project, okay, just shut it off for a while, I'll just take 2 minutes. Okay, I'll just take 2 minutes, 1 minute, please be quiet. Let's understand this principle, okay? You should know how these general principles can be applied to value every asset. So what you did to value the NPV, same thing will happen in the case of bonds, same thing will happen in the case of equities. Except the cash flows of the project will change in the case of equities to dividends or earnings. In the case of bonds, it will change to a bond coupon. But the basic structure of the equation will remain the same. You should be able to see the sameness, the oneness of everything. Okay. Now, even for valuation of software assets, same principle. What returns is it going to make? Project the returns and then discount the returns to find the value of the project. So, because the market is selling off the shares of HCL, the point I wanted to make is, I'm going to save time. The point I wanted to make in this class, in the other class, is that the market therefore believes that the value of those software pieces of software that they have bought, okay, from IBM, if you do the present value of those software pieces of software by projecting their licensing revenues and discounting those licensing revenues, that value of that set of cash flow returns must be less than 1.8 billion, because these guys have paid 1.8 billion for something. and therefore the market must believe that what they paid 1.8 billion for is actually worth much less than 1.8 billion, and that's why they're selling off the shares of HCL. Okay, I just wanted to make sure that you are able to apply this framework and come to this conclusion. Are you following? Okay, so I'll include the article in your notes. Okay, I'll just put it in your contract law notes itself. Okay, and then you can just read the article. And guys, you have to step up your coverage of business news. Nobody knew except I think the other class. I don't know who it was. Somebody remember? I think SG2 was aware of this news. Everybody else was not aware. Okay, SG2 is your singer. Yeah. Okay, guys, you can go now.